they say, well, how much have you made? I say, more than what I've lost. And that's what it's all about. That is the game that is crypto. Why trade perpetual futures? And actually, what is a perpetual future? There's over 100% profit. I'll share my real P&L card, and I'm also farming points for their upcoming drop. One is called cross margin, and this is evil, and we don't like this because it gets a lot of people very wrecked. I love trading, bro, but it's so hard. I mean, I wish I'd had someone to help me figure stuff out when I started about 10 years ago, because I got wrecked a lot. One of my favorite things is when people say, yeah, how much money have you lost? They always start with lost. And I'm like, so much, honestly. It's a disgusting amount. And the smart people, they say, well, how much have you made? I say, more than what I've lost. And that's what it's all about. That is the game that is crypto. Crypto is amazing, but right now the chart action is pretty horrifying. It is red in the charts. So how can you position yourself to take advantage of that? Now, what I'm about to tell you is not financial advice. I'm not a financial advisor. I'm just a crypto writer and trader and DJ who's been in the game for a long time. So why trade perpetual futures? And actually, what is a perpetual future? So the clue is in the title. It's a long-term contract that bids whether the price is going to go up or down. That is it. It doesn't expire. So you can enter a position based on a long-term trend and go to town. Now, what it does that's so useful is it provides exposure to an asset without having to buy and hold the asset. You can long and short pretty much anything, but today we're talking about crypto. So if you wanted to long Solana without setting up a Solana wallet and holding Solana, you can go right ahead. And that's awesome because you might make some gains. You can short the asset, you can sell it without having to, do anything else. And importantly, and I don't hear people talk about this enough, you can farm airdrop points. Like Hyperliquid made a huge airdrop to people that were trading, and now every perp dex in the world is offering a points program. I'm going to show you some examples of a trade I've done for you just this week on Paradex. There's over 100% profit. I'll share my real P&L card, and I'm also farming points for their upcoming drop with that, which is awesome. So those are the reasons to trade, including leverage, but that's very risky, and we'll talk about that in a little bit. Okay, so here's what you need to understand about trading if you're just getting started is fees. There are fees, and there are going to be more fees if you trade on a centralized platform than if you trade on a decentralized platform like Paradex, which actually is charging no fees at the moment, which is pretty cool. So maker fees are when you provide a limit order liquidity at a certain price, and then takers, people like me who do market orders, come and take that liquidity at the current spot price, right? The market price. So that trading market means I want to open this right now. Trading limit means I want to open this certain price that I think is going to hit pretty soon. Okay. So when you're doing your limit or market orders, you need some margin, okay, to open those. And there are two types of margin. It's really important. One is called cross margin, and this is evil, and we don't like this because it gets a lot of people very wrecked. In fact, on October 10th last year, it got people so wrecked, some of them left crypto entirely, and goodbye, RIP to those people. But the important thing is, the reason you would do it is it uses your entire portfolio balance to collateralize the trade, which lowers your liquidation point to a point where you assume it's never going to hit, right? Which is kind of ignorant because we know with crypto, it might hit whatever bloody price it wants to. So the better thing for everyone to do would be to, at least when they're starting out, use isolated margin, which is when you say, I'm going to use just this margin for just this trade. And it's going to be, that's all I'm willing to risk. I'm not risking my whole portfolio on one trade. That's nuts, right? I mean, I don't use cross very often, although you will see maybe some evidence that I do sometimes. Okay, so once you've decided the type of trade you want to do, and the platform you want to trade on, you're going to head over to the charts. And these can be a little bit scary at first, a little bit overwhelming. You've got all these assets to pick from, all these different time frames. Really, a lot of people say the 1 minute chart and the 5 minute chart and the 15-minute charts are just noise. I don't know if I agree with that. I think every chart's useful. That's why they exist. But if you're looking to day trade within ranges, really the 4-hour chart is your guy. So you can take a look at him and you can start to think, okay, based on the historical data of these assets, can I identify support and resistance levels that I think the asset's going to trade between for a period of time without any big macro news coming up? Now, which assets are safe to trade right now? Some people would say none of them, but I would pick these three, right? Bitcoin, Ethereum, and Solana. These coins have billions in daily futures trading volume. They are not going away. And crucially, because they've been established for years now, there is a lot of historical data for you to draw from going back years. And you can say, okay, I can see whenever the price dips to this level, there's a ton of support comes in, people bid it right back up. So I'm going to set a limit order, catch that, boom, up we go. Awesome. And right now, Solana and Bitcoin, we've got some interesting levels. I think that in the short term, we're going to be shorting right now. Okay. If you want to long something, go long gold and silver. Don't quote me on that, but that's the alpha. Now, speaking of alpha, I want to share with you, so that you don't get wrecked, some serious things that I wish I knew back when I started out, because I've lost so much. It's painful. Anyway, the most important thing, right? Absolute number one thing to understand is the nature of the word unrealized. And that relates to profit as well as loss. It is not realized until you close the trade or partially close the trade, right? Which we'll talk about. So when you see some traders saying, look at this, this ridiculous P&L chart, right? They might not have actually closed the trade. It might have only showed that P&L just for a second and come straight back down, right? And they're easy to fake, which is a shame. So until someone says, look, here's in the transaction history, I've realized this gain, you can't really trust those. So unrealized is key. Nobody ever went broke from taking profits. So realize some of those, and you can partially close trades. So let's say you did $100 trade, it's way up. You could just close 75% and leave a 25% moonbag in case it goes higher. It's a smart idea, but always realize gains, or you're going to kick yourself looking back thinking, oh, it was up much higher before, it's come back down again. Now I've got to wait potentially weeks, potentially forever. Okay. So do that. And also, as part of that strategy, when you are up, if you move your stop loss to your entry point because it's gone right up, you have completely de-risked the trade, which means you are just in free money, apart from the fees that might be eating your profit. But in terms of the trade itself, if you move the stop loss to your entry point, you're in a risk-free trade. Okay? Now, what else? Do not catch falling knives. I am such a sufferer of this. I look and I think it's so down, it's going to go even further down, and just on emotion and instinct, don't even look at the levels, just ape in because you assume that's the bottom, and it's not, and you go down and down and you keep doing it, you compound your losses, it's horrific, you wipe out your account. So the real alpha is you must not do that. It is okay to open a trade high. Okay. Once a move has been confirmed to the upside, you need to be comfortable opening high and then closing higher. It's better to get that as much of that swing as you can once it's confirmed in the direction of travel than to try to keep timing the bottom, because that's so hard. Even experienced traders cannot get that bang on the money. So the most important thing to do, identify that it's now switched bullish. There are multiple ways to do that. We can talk about more advanced things in the future, but identify the trend is now flipped bullish. confirmed move to the upside, ride it up, take those profits, grow your stack, increase the margin you use with every trade. And at some point, you're going to be not only getting airdrop points, but also real cash money. So that's the alpha from me, Albo. 10 plus years of trading, and man, I wish I was better at it. But I hope you guys have a great time. Share those P&Ls with me, and good luck.